Hi, and welcome to the Market Alert for Tuesday, the 20th of April 2021. So the headlines are cryptos crushed, dollar dumped, semi-slammed, semiconductors slammed as VIX spikes. And as the subhead says, I don't like Mondays. They generally get a pullback after a big spike. Like Friday's, US futures dipped from record as Chinese stocks soar. Risk is coming down, volatility is coming down. We see the slow reopening of global economies, the rollout of the vaccine, and the huge catch-up in demand. So from that perspective, it should be positive for economic growth. And that's what I was talking about in last week's Market Alert, this releasing of the pent-up consumerism, etc., from the lockdowns over the winter. You will see this for a while, but of course, this is going to add to inflation as well, which we'll see in just a moment. The calm before the storm. Goldman says buy the dip in the VIX. There is a VIX expiration on Wednesday, which could shake things up a bit. So again, we'll look at the implied volatility with regards to this. Stock market leverage in La La Land rises to historic highs. Archegos shows how leverage is a great accelerator of stock prices on the way up, and also on the way down. It's even faster on the way down, that's for sure. But you can see there the amount of leverage that's in the markets at the moment. Very dangerous indeed. Fed's inflation problem. Easy money creates more market than reported inflation. The Fed has an inflation problem, but it's not the failure to meet an arbitrary target. The problem is that there is a significant separation between reported and market inflation. Very interesting indeed. And speaking of which, this is our favourite bankers actually. Let me just deal with this. I don't follow football, never have, no interest. But I see that there's a bit of a hoopla going on at the moment with regards to this European Super League. And guess who's behind it? Our friendly bankers, JP Morgan, backed the European Soccer Super League. So not only are they manipulating the precious metals markets, they're also behind the European Super League as well. So what a surprise when I saw that. I thought I'd just throw that in there as well. But going back to inflation, lumber hasn't had a down day since March the 26th, and it's sending home prices soaring even higher. More inflation. The costs have to be passed on to home buyers. So this is also going to cause, obviously, a major problem with prices grinding to a halt as well, because it's going to price out new first-time buyers as well. But when you see this in the chart, you can see here, this is the CME lumber. I think I traded this once in the 1990s when I was a new trader. And then I had a visit to the CME in Chicago. I had to go over to the US and was allowed on the trading floor. And I was staggered when I discovered that there were only 3 or 4 traders in the lumber pit in those days, and they were busy playing cards, a bit like the pork belly traders. So it's easy for them to actually do this with lumber and just keep marking it up. But if you want to see how expensive lumber is, let's just click on the max button there, and there you can see how expensive lumber has become in a matter of just a few months. And this is what you're going to see in the metals markets once the likes of JP Morgan and Co stop manipulating the price. This is how the silver chart will look as well, but for the time being, of course, we know it's being rigged and manipulated. But that's what inflation looks like. And when you start to see it in the likes of lumber, incredible that what's coming down the line. This is a great site. I've used a bar chart. Started out as Night Ridder, then became Bridge data, and now CRB data. If you have a look at the futures, you've got them all listed there if you wanted to have a look through the softs or anything else. I've not looked through them, so I wouldn't know, but just out of curiosity, let's just have a quick look here at let's say the cocoa market or coffee. Let's just have a quick look at coffee. I know I'm digressing here, but sometimes it's just worth having a look just to see what's going on. We'll go with the May contract. I remember this being up limit as well for 14 days on the trot in 1994. So there you go, you can see where we are. just to show you what inflation looks like in commodities prices. We haven't really got going then yet in the coffee market, so a lot of potential on the upside there. But all of these other spikes, this is back in the 1997, 93, 94 is what I was talking about. We had 14 days where the market was limit up. So you can see that we're due for a move in the coffee market there as well. So let's move on to more important matters, and implied volatility spiking up from 302 yesterday to 13.7, which is a big move for yesterday, and that's because, as we'll see in a moment, the market moving lower. The yields back at 162, starting to move back to the upside again. So there not seem to be much control of these yields. You can see there overnight prices moving back, or latter part of yesterday's session there, starting to see the yields moving back up to Thursday's 1.65. And economic news today, we've only got the claimant count for the UK. This is out at 7 a.m. Forecast to have created 24,000 jobs is what it's saying there. We'll wait to see. So let's move on to the Dow for yesterday. We can see, and this is very interesting, all stock markets showing some potential weakness for yesterday, some selling. However, the Dow, again with the assistance of the plunge protection team, you can see prices moving higher. So what I'll be inclined to do is this, because what we've got here, we've got a situation where the market's pulled back. We want to see how much its strength as it's got to move back to the upside. So I'm just going to get the fib retracements, draw from here to here, and what I'll be looking for is an 89% retracement. So let me just see if I can make this a bit bigger so that we can see. And what I'm going to do is to remove the 38, the 50, 62, and leave just the 78 and 89. And when prices approach this area, as you'll see on intraday charts or on many other time frames, the market could struggle. And if it does, then there's likely we can see the start of a correction. And if not, then it's quite simple. We go on to make a new all-time high, which we have here at 34,253. And in the German DAX, we're looking at a similar picture. And I say similar, you can see that we had Friday's move to the upside, low volume, and then yesterday we saw some profit taking coming into this market. And again, we also see that the market trading down to 50% during yesterday's session. So we'll delete the 38. We'll keep that in for the moment. And then what I'm going to do is draw in the fib retracement as well from this high to yesterday's low and see what we get moving back to the high. So we go from the high of this bar to yesterday's low, and again I'm just going to remove the 38 there. You can keep the other ones in as the market moves back, but again, crucially, the ones, or the two that I'm interested in are the 78 and 89. And again, if we just see if we can zoom in these a bit more just to make it easier to see. There you go. So they are the two target areas should prices reverse and move to the upside. Not necessarily in one day, but as we come up to this level, then watch out for major resistance. But we have got some weakness around. We could also see prices do this and start to move down towards that 62. The moment prices still remain above the 5-bar moving average as well there. In the overnight 2-minute there, you can see prices sitting on yesterday's close and above the 200 MA. Apart from we had a bit of a pullback here, a slight increase in volume. Let me just reset this chart so we can see a bit more. That's better. So you can see this. So prices pulling back, finding support here. There's a bit of a cluster of volume there, then buying back. Very quiet at the moment, as you can see there. So back to the 200 MA. And in the bigger picture, if we just scroll everything together, compress it all, you can see that we're this far away from yesterday's low, which is around 80 points. and up to the high is just over 120 points there, ballpark, for the DAX. And finally, in the metals, seems to be a pattern developing here that within silver as well. Interestingly enough, we got a similar picture to the stock markets yesterday. We saw a bit more selling, but price is finding support overnight. And there seems to be this pattern with silver at the moment. The market opens at 1:30 or just after 1, and you'll see this all the time. You know, it can be sitting beautifully all morning. It opens and JP Morgan and Co come in and start to sell. Interestingly enough, though, we're finding that the market is got support at the $25 level. This is 25.50 where that's trading, or just below it. Sorry, just above it. If I just do this, you'll see the blue line there for 25.50. So the market managing to come off around 25.70 there, and holding overnight. Again, we're seeing a bit of Asian selling, a massive volume there, but being brought back. Again, you've got support here and another small spike in volume, and then a bit more as they move the market to the upside. And again, at the DP level, to try and hold prices and get through the most important area, the next psychological level of 26. You can see that we had a bit of an issue here when we got to it, but they're trying to buy back in there again at the moment. Now, I'm surprised given the weakness in the dollar yesterday, trading through that 91.25 support to the left, and also the 62% retracement from this low to this high. I've had to move off this low here to this low so we can see where we are. Again, watch the 89%. If we get down to 90.07, 90 is going to be a major psychological level for the dollar, so we could expect some support there. So if you're in the metals, watch out for that level in the dollar. Again, in gold, you can see the same thing again as we saw in the stock markets and in silver, where there was some profit taking at the 78% during yesterday's session there. Through the 62, stuck at 87 there at the moment. Sorry, at 78, not 87. Okay, let's have a quick look at yesterday's market action. Price is down slightly in the pre-market, then moving to the upside in the futures. Again, you can see the futures traders coming in, the activity picking up there. A bit of a pullback there, and then as we kicked off at the open, we had a buy signal. Market trading up to this BRN, and we then see the selling coming in. Hung on to the trade for a bit longer as the market came back to the 200 MA, and then traded up to the BRN, and then at this point you'll see that we've got a lot of volume here, narrow range, spike up there. There's some selling in the market, decided to exit given the market had put on so much during Friday. Turned out to be the right move as prices came down. We had a potential sell signal that wasn't filled, and then the market got into a sideways range, drifting lower, struggling with the 20 bar moving average. We had a close above here for 2 bars. We see the 2 green bars there, and then prices moving to the BRN. So a 50-point range in the morning. Got a bit of support here. You can see this demand coming in as prices then just drifted sideways for the morning, trying to move back to the upside there. Then in the afternoon, prices were sideways, bouncing off the DP level, as you can see there. And then eventually, as we break the DP, you'll see prices accelerate to the downside as the Dow moved also, and then you'll see huge demand coming into the market here after the selling down to the 15,400 level, trying to hold prices, and that worked for a moment or two. You can see prices sitting on this level, then trading back to 50% up towards 62 where the 20 bar moving average is, and then trading sideways once more to lower as the prices pull back to the 15,400 level and back to 89% from here to here. The market finding support. That's what I mean, the power of the 89. And then some more weakness as we retest the low to the left and then continue to drift down as we can see there, and more buying coming into the market to bring prices back. And then that was it for the afternoon session. So it's not as big a move as it actually looks. It's because of how quiet it was. It just looks a bit more dramatic there. So around 60 to 70 points would be, I guess, 25. Yeah, about that. Okay, that shall do it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.